Good morning. Welcome to Market Day Report and welcome to a Monday. Well, we have a full trading week ahead for us and no major reports coming out this week. However, we will be looking for an export sales report on Thursday. And speaking of export sales, we get a flash report, overnight sell to China. And as we look at this flash sale, it's soybeans to China. We'll talk about that in just a moment. First off, let's go to the corn market. And corn has been trading in the overnight session at 422 and a quarter on the December, down 3/4 of a penny. And the March contract, the most active at 431 and a quarter. It's down 1 3/4 cents. Well, we mentioned the soybeans. And the January contract down a nickel at 984 and a half. The March contract at 991. That's down a nickel as well in the overnight session. Wheat market 2 pennies higher on the D's at 534 and a quarter. That's the Chicago. And July at 558, down 5 3/4. Kansas City, July at 551 3/4, down 4 1/4 cents. And the spring wheat contract in Minneapolis looking at March now at 588 3/4, down 3 pennies. Now to cotton. The March contract 70.80, down 113 points, in part due to maybe weakening in crude oil. Yeah, once you see the crude oil market start backing off, that's man-made fibers. And so, yeah, a little pressure into the cotton market in the overnight session. Brian Hoops is president, Midwest Market Solutions. Brian, welcome back. And as we start the week, a flash sale.
Yeah, good morning, Tony. Hope you had a great weekend and everyone else as well. 134,000 beans sold to China this morning. So we had pretty strong sales on Friday, followed it up with a sale again this morning. Now, if you remember on Friday, we didn't see much in the way of any follow-through buying or any buying off of this news. And, you know, what's going to trump this news is weather in South America, and that looks really good. They had rain in Argentina over the weekend. There's rains forecast early part of this week for both Argentina and Brazil. And then by the weekend, even bigger showers roll into both those areas. And that's going to keep crop condition ratings very high. It's going to make the yield potential very high. And, you know, this is kind of the early time frame here in the growing season where it's equivalent to June, July here in the United States. Month of December will get either rain and prices working lower, or things turn hotter and drier and prices move a lot higher. But right now it looks like good rain showers. That's going to keep pressure on these markets. Rally attempts will probably be sold by the trade because of these good growing conditions. And we saw, you know, a few deliveries overnight, not much as far as of corn, but 394 meal deliveries, large, but not really anything that's going to be a game changer. We have census crush report coming out at 2 o'clock this afternoon. It's expected to be record large crush for any month out there, and that should support meal probably most of the day, maybe some spreading against soybean oil as the trading day progresses. But probably the main focus is going to be on that South American weather and how the market reacts to it coming out of the night session trade.
All right, so you mentioned weather, and I'm just curious if we're talking weather in Brazil, and that could turn the tide maybe for corn or beans. What about weather here in the U.S. for wheat? Is that part of the pressure in the wheat market?
Yeah, the conditions have, you know, improved, I think, around 17% over the last 6 weeks. And so we won't have crop progress numbers any longer on Monday afternoons. We're done with that. But as the wheat market now is presumably gone into dormancy, ratings are better than a year ago, the second highest in the last 8 years. And that's going to keep the pressure against this wheat market for now anyway. So, of course, during the winter months, we'll watch, is there snowfall? And there was some across northern Missouri yesterday. You know, when you get snowfall, it acts as an insulation blanket. It acts as nitrogen for the soil and for the crops. So any snow is going to be viewed as positive from here on out through the winter months, and then of course until we get into breaking dormancy later in the spring. So yeah, wheat's finding a little bit of selling pressure, just not that much demand for wheat. And if you don't have a weather issue or a supply issue, you're going to see weakness against prices. ABARE was out over the weekend, and they increased their estimate of the Australian wheat crop just slightly, but even that small increase puts it 23% better than a year ago levels. So world competition is on the rise as well.
Brian, great stuff to start the first trading day of December. How about you hang on? We'll come back and talk livestock futures in a moment. Market Day Report continues after this. Cash cattle developed last week in a range of 189 to 193, mostly at 190, and that's $2 to $5 higher than the week before. What about dress? Dress 295 to 300, but mostly 296. So what happens this week? Well, we'll talk about that in a moment. First off, live cattle futures on Friday. In that shortened trading session, December down a couple of pennies and February up a couple of pennies at 188.62. Then for the feeders on Friday, January 70 higher, 259.47. March up $1.32 at 258.62. Hog trade on Friday was in the red. December slipping 32 to 82.07. February lost $1.60, 86.32. Let's bring back in Brian Hoops, Midwest Market Solutions. When we look at the protein, what are you watching?
Well, you talked about the hog market there for a second. It had a poor close on Friday, but really it was set up by Wednesday's technical action where we kind of had a hook reversal, made some highs, and then closed on the lows, and a lot of follow through seen on Friday in that low volume session. So likely to see some more follow through selling this morning in the hog market. When we get to the point where we don't make new lows, you can see some short covering, but until then we're looking at real technical type trade, and that looks to pressure the market. Cattle could be in the opposite direction. I didn't think we had a great action on Friday, but maybe some of that's to blame because of the end of the month type trade and the low volume holiday session. But we had that stronger cash trade that you mentioned, and I think the futures probably are too heavily discount in that front end and need to move higher. Given that 190 trade that you mentioned. So, even if we trade steady this week, December looks to be too cheap. Calls right now are steady to possibly higher again this week in the cattle country. It would be nice to see the cutout values also move higher because the packer margin's starting to slip a little bit after paying that higher money last week. They went from about $22, $23 in the red to an estimated $50 in the red right now per head. So like to see those cutout values move up. If we're going to see that stronger cash trade, it's almost imperative that the cutout values somewhat follow that cash market higher.
Brian, thanks for the insight. We'll see you back here on Wednesday. Brian Hoops, Midwest Market Solutions.